If you caught my last video on how REITs work, you already know they're one of the easiest ways to invest in real estate without tenants, toilets, or dealing with property at all. But today, we're going deeper. In this video, I'm breaking down 5 top REITs that pay consistent dividends, some monthly, some quarterly, and could help you build long-term passive income in 2025. Plus, I'll reveal one REIT most investors ignore, but it could deliver serious passive income over the long term. Let's kick it off with the OG, Realty Income, ticker symbol O. They literally call themselves the monthly dividend company, and for good reason. Realty Income has been paying monthly dividends since 1994, offering investors consistent income for over 3 decades. The company owns a massive portfolio of more than 13,000 commercial properties, with well-known tenants like 7-Eleven, Walgreens, and Dollar General. As of 2025, it offers a dividend yield of around 5.7%, making it a strong option for passive income seekers. And here's the kicker. Realty Income is a dividend king, meaning it's increased its dividend for 50 plus consecutive years. That makes it an elite company among the most reliable income stocks on the market. But it's not just about dividends. Realty Income has also delivered solid stock price appreciation over time, rewarding long-term investors with both income and growth. It's a go-to for anyone looking to build a reliable, long-term income stream without the headaches of managing property. Next up is STAG Industrial, ticker symbol STAG. This REIT focuses on industrial real estate, specifically single-tenant warehouses and logistics centers that support the booming e-commerce sector. Its properties are the backbone of modern supply chains, with tenants ranging from third-party logistics providers to e-commerce giants. STAG has built a portfolio of more than 500 properties spread across 40-plus states, helping achieve geographic and tenant diversification. As of 2025, its dividend yield sits around 4.2%. And here's the best part, pays dividends monthly, making it a favorite among passive income investors. While STAG's yield is a bit lower than others on the list, its exposure to e-commerce infrastructure gives it strong growth potential. The company also emphasizes long-term leases and a high occupancy rate, which helps support steady cash flow even in uncertain markets. STAG is ideal for investors looking to benefit from the continued rise of online shopping without betting everything in retail stocks. Third on the list is Agree Realty, ticker symbol ADC. This REIT specializes in net lease retail properties, which means tenants are responsible for most operating things like maintenance, taxes, and insurance. That structure helps make ADC's cash flow more predictable and low risk for investors. Agree Realty owns a growing portfolio of around 2,000 properties across 49 states, and their tenants include recession-resistant names like Walmart, Tractor Supply Co., AutoZone, and Dollar General. These are businesses people continue to shop at regardless of what's going on in the economy. The company pays a monthly dividend, which currently yields about 4.9% as of 2025. And just like Realty Income, Agree Realty has a track record of consistent dividend growth with annual increases every year since becoming a public REIT in 1994. What makes ADC especially appealing is its focus on essential retail and strong credit-rated tenants. It's not exposed to the struggling mall sector and instead leans heavily into high-traffic, necessity-based locations. If you're looking for reliable income from retail without the risks of traditional shopping centers, ADC deserves a serious look. At number 4, we've got LTC Properties, ticker symbol LTC. This REIT focuses on a very specific and growing niche, senior housing and skilled nursing facilities. With the United States population aging rapidly, demand for senior care real estate is expected to surge in the coming decades, giving LTC a powerful demographic tailwind. The company owns a diverse mix of assisted living communities, memory care units, and long-term care facilities, all spread across multiple states and operated by experienced healthcare providers. These properties are leased under long-term agreements, which helps stabilize cash flow. As of 2025, LTC offers a monthly dividend with a yield of around 6.3%, making it one of the higher yielding options on this list. What sets LTC apart is its exposure to healthcare real estate, which tends to be more recession resistant. Regardless of economic conditions, the need for elder care rarely declines, and that makes LTC an attractive option for income-focused investors looking to diversify beyond traditional commercial real estate. If you want to invest in a sector with built-in long-term growth potential and get paid monthly while you wait, LTC is worth a serious look. Rounding out the list is Gladstone Commercial, ticker symbol GOOD. This REIT invests in a mix of industrial and office properties across the United States, with a portfolio of more than 100 properties in 24 states. While office real estate has faced many challenges in recent years, Gladstone focuses on mission-critical spaces, the kind of properties tenants are unlikely to abandon. Gladstone is also one of the few REITs that's maintained a monthly dividend for nearly 2 decades, and as of 2025, it offers a yield of around 7.5%, one of the highest on this list. What makes Good stand out is its disciplined management approach. The company emphasizes long-term triple net leases and a high occupancy rate, which helps offset some of the sector's risks. Now, full transparency, Gladstone isn't a growth machine. It hasn't increased its dividend in years, and its exposure to office adds a layer of risk. But for investors seeking steady monthly income with a higher yield, Gladstone might be a solid piece of the puzzle. Just make sure to pair it with more stable names like Realty Income or ADC to balance your REIT portfolio. And as promised, here's your bonus pick, SRET, the Global X SuperDividend REIT ETF. This isn't a traditional REIT. It's an exchange-traded fund that holds a basket of high-yield REITs from around the world. Its goal is simple: deliver income, lots of it. As of 2025, SRET offers a dividend yield north of 9% paid out monthly. It includes both US and international REITs, which adds some global diversification to your portfolio. Now, a quick heads up, this ETF is built for yield, not growth. The dividend may fluctuate, and some of the holdings are riskier, which is why it yields so much. But if you're looking for a high-yield option to boost your monthly cash flow, SRET can be a useful addition, especially as a satellite position with a more balanced income strategy. So there you have it, 5 top REITs, plus a bonus ETF that could help you generate reliable monthly income from real estate without ever owning property. If you found this breakdown helpful, go ahead and hit that like button and subscribe if you want more videos on passive income, investing, and financial independence. I'd love to hear from you in the comments. Which of these REITs do you own, or are you thinking about adding to your portfolio? And if you missed my last video where I explain exactly how REITs work and why they're such a powerful tool for everyday investors, I'll link it up here on screen. Definitely check that one out next. Until next time, keep stacking those dividends, and I'll see you in the next one.